NAB's Director of SMSF and Investor Behaviour, Gemma Dale, joins us live at the desk this morning. Gemma, pleasure to have you on board.
Hi.
Happy International Women's Day as well.
Yes, you too.
Good day for us. Look, let's talk about the market. Yes, we're a bit weaker today, but all in all, seems like the Aussie share market's been holding up pretty well relative to the rest of the globe. This week, what kind of volumes and transactional sort of numbers have you been watching?
What have we been seeing? So we've had a really strong reporting season. Was really strong for our investors. It was quite surprising how enthusiastic a lot of our investors were, mostly picking things up on weakness. So we have a lot of investors who hold a lot of cash and they use it as an opportunity to pick up their favourite stocks on weakness during reporting season. And there were some real opportunities for them. Their CSL had an enormous day after their results disappointed a little bit. So that was huge. So we saw quite a few of those numbers coming through a few weeks ago. What we've seen in the last week is a real shift. So investors are starting to move away from the top end of the market and going back down the spectrum towards some of their favourite small caps, but trading in and out quite actively. So we're not seeing wholesale buying by any means. We're actually seeing a lot of trading quite actively. The big favourite is this, the Afterpay split.
Yes.
And Zip less so, but it's in there as well. So Afterpay, Split It and Zip are really fighting for attention, but traded quite actively, so they're not picking them up wholesale and just hanging on to them. This is not a buy and hold.
So they're getting in and out of these stocks and moving around a fair bit.
Really
Everyone's trying to pick the next Afterpay, so I guess they're looking at those other stocks. A lot of our guests here refer to them as the Me Too stocks because they're all trying to get on board and everyone is trying to, pick the next big move.
There's a heap of FOMO going on with these guys. You can see them, everyone's like, oh my God, this is so exciting, we'll get a bit of this, a bit of this. Oh my God, it's a bit high, I'll drop it out, I'll get it. So there's been really active movements in those, which has been quite fascinating. But to see two of those stocks, which we would never have seen in the top five 2 years ago, all sitting in the top five in 1 week is quite fascinating. So we've seen all that activity. The other area that our investors love as a growth play, I guess we'll call it a growth play, is that China milk story and the China consumer story that they've been enthusiastic about for years now. This is not new, obviously, but BELLAMYS, Blackmores, the Bubs Australian news yesterday was obviously big news for our investors. So we saw a lot of activity, but again, it's trading, it's not buying, which is quite interesting for our guys. We would generally see, if it's a growth stock that they see a lot of future potential for, they'll get in and hang on. We're not seeing that at the moment. We're seeing a lot more active trading. They're taking much shorter term bets on some of these things and getting out quickly when they see the prices come back. The other thing that's been quite interesting is fairly consistent selling of banks because prices have improved a little bit and they're profit taking across the board there.
Right, just on those milk stocks again, HM Milk obviously the other big one that we refer to, and you say growth stocks, they've been doing well obviously for so long, but it almost seems like sentiment has shifted a little bit. We're watching really closely what is coming out of China. That news from Blackmores as well recently, where perhaps things are not looking quite as strong as they were expecting previously. It kind of seems to have rattled things. So we are seeing, is it, profit taking being sold off? There's just a little bit of concern around those kind of China-related stocks.
I think that's absolutely there. So when that Blackmore story came out, generally our investors would leap all over that because that is the kind of story they love, right? We see a bit of weakness, we're going to get on that. We don't think it's going to have a material long-term impact. We didn't see it this time. So that tells you that they are not seeing the weakness as a buying opportunity. They're seeing it as a genuine longer-term concern that things are shifting. As I said, so we're seeing this more active trading rather than this buy and hold strategy that we saw probably 12 months ago. It's been quite interesting to observe. The other one that's been really fascinating, this blew my mind, I only found this out this morning, is our SMSFs have been sellers, net sellers for 4 out of the last 5 weeks across the board.
So that's through reporting season as well?
Right through reporting season. So where our investors are generally seeing lots of opportunities to buy. So SMSFs within our portfolio are net buyers 41 out of 52 weeks. So across the year, 80% of the time they are net buyers. They like to add to their portfolios. We know SMSFs hold a bucket load of cash, right? They always have. They have about 25% of their portfolios in cash and TDs. So their opportunity for buying is pretty consistent, right? They've always got the money there to do it. And we have seen them buying from October. So as the market tailed down, they saw that as a buying opportunity. They bought really consistently from October through to the end of January and got out. So that is the first time we have seen that. Every other reporting season, our SMSFs have been buying. This time they're like, we're going to the sidelines, we're not in it anymore.
Right. They obviously think now perhaps is, you know, we've sort of moved up from those lows that we were watching at the end of the year. As you say, now sitting on even more cash. Is that kind of telling us anything about the direction of markets from here or not really? I mean, that's just their kind of buyer activity that they are trying to predict markets.
It's always interesting to observe. There's some research done by Core Data where they look at SMSF trustees every 6 months, and they have said, this was a little while ago, that they believe that SMSF trustees lead the market by about 6 months. So their view is SMSF trustees will get out about 6 months before the market tops and then starts to tail away, and they will get in about 6 months before things turn. So looking at what they've done in the last 6 months, they got in as the market came off. And as prices bottomed out and came back quite strongly, and now they're getting out. I don't know what that tells us about what the year's going to do, but it's really interesting to observe. We have not seen that for quite a few years. So they have a view. Clearly they have a view. It's not the behaviour that they've demonstrated over the last 12 months or definitely the last 5 years.
We talk so much about diversification, not just within sectors, but of course outside the Australian market as well. We talk about international equities a lot with you. What have we been seeing in terms of activity and volumes in the international equity space?
Yeah. So we've seen real changes in international as well, which is fascinating to observe. So all the action's been reporting season at home, but it hasn't stopped investors going offshore. What has been most interesting about it is this massive dispersion of stocks that people are buying now. So when we launched international trading, it was US, UK, Germany and Hong Kong. 90% of trading was in the US. 90% of it was buying because people hadn't held them before. That's a logical behaviour. Yes. Haven't held it before, very difficult to sell it. Yeah. So they're buying, and they were buying primarily in the US. That has changed over the last 2 years, and we've seen far more buying, particularly looking for Asian growth opportunities. So of our top 10 stocks, 9 are technology-based, which is not a big surprise to anybody. They're looking for that diversification into the tech space, looking for that growth. But where 2 years ago, 9 of those 10 would be in the US, it's now 6 in the US and 3 that are China-based. So they're looking at Tencent, Baidu, Alibaba, these sorts of stocks, and looking for the growth potential for that enormous, enormous population and the growth opportunity there.
China's had a huge run-up since the start of the year.
Yeah, they've
been a good place to be.
That. Yeah, so investors have been buying that pretty strongly.
Yeah.
They have also, though, been buying a much broader variety of stocks than they had previously. So you would get our reporting a year ago and you might see 50 to 100 different stocks. You'll now see hundreds and hundreds of different stocks, which shows people have a lot more confidence when they go offshore. They're looking at a much, much broader range of opportunities, much broader range of sectors, much broader range of geographies. So they will buy in the US, but for a company that might be located in many regions around the world. So investors are clearly showing much more confidence when they go offshore. The other thing is that trade sizes can be pretty sizable. So looking at Amazon last night, the average trade size was $70,000.
Wow.
So
one trade.
Yeah. So I'm buying Amazon, I'm going to buy $70,000 worth of it, and that was many individuals doing that. Many have self-managed funds as well. You know, that's quite a confident trade, right? That means either you've got an enormous amount of money to invest, but for one stock, it's a big position.
Yes.
And we see a lot of that now. People, when they take a position in an international stock, it's not going to be $1,000. It will be 10, 20, 30.
Enormous amount of confidence in the stock as well. So very interesting, as always. Look, Gemma, it's been a pleasure. Thank you so much for joining us today.
Thank you.